in rate over the last several years on trades he takes and is giving in his options live trading room, and is one of the most successful options alert services in the industry. His calm and confident demeanor lends to a trading environment that's stress-free. Ladies and gentlemen, here to present how to leverage Heiken-Ashi candles is Mr. David Wise of Right Line Trading. Welcome back to Traders Corner, David.
Hello, and thank you. Thanks very much. I appreciate the nice introduction.
Oh, David, we know I'm a fan of yours as well.
I appreciate that. And I know it's getting late in the day, and I've been listening to some of the presentations, and I probably watch more of Barry's videos than anybody else so over the years. But again, I appreciate that. Thanks very much, and I'll try to get started. I want to try to squeeze this into 45 minutes if I can.
You're very welcome, and go right ahead and please do.
Appreciate it. Thanks a lot. So again, my name is Dave Wise, and I have a Compass Option text alert service and a live trading room, and I've been doing this for about almost 14 years now. And just to give you a quick, I know a lot of people like to do introductions of themselves. I don't like to talk about myself that much. I'm not a professional presenter. I'm a professional trader. I've been doing it for a long time. But one question I always get asked is, when did I decide to go from part-time trading to full-time trading? And it's kind of an interesting story. This is about coming up 14 years ago now. I was working in IT. I had been working in IT for many years. And about 14 years ago, my boss, who I was good friends with, actually called me in and told me that business had turned down and he had to lay me off. And this was about 2 weeks before Christmas, actually, when it occurred. And I said, fine. I had been trading part-time. Looked like a nice opportunity to do a little bit of trading, even though it was the end of December, which wasn't that great a time to be trading. But I had a setup at home, so I started trading full-time. I had been, like I said, been trading part-time. I started trading full-time, and I had a really good January, and then February was going along even better. And about midway through February, my ex-boss called me and said business had turned around and things were looking up, and he wanted me to come back to work. He said, you can come on back, start Monday. And I told him I really appreciated the offer to come back to work for him, but as it turned out with the trading, I really couldn't afford to work for him anymore. And that's how I started becoming a full-time trader. And it was not really a plan. I had been doing it for a while, but it's an interesting story, and I like to share that that's kind of how I got to where I am right now. So we'll get started here. And again, I'm gonna talk about my alert service and the room that I have, the Compass options room. But I'm gonna spend some time on Heiken-Ashi candles. I have a lot of interest in that. I use them all the time, so I wanted to spend some time on that and present some educational materials around that. So we'll get started here. Again, we want to do the usual disclaimer that we have to do. All signals and trading opportunities we provide are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors. All right, so we'll move along here. By the way, if you have any questions during the presentation, I'll try to monitor the questions, but if you have questions and you need somebody to get back to you, if you just put your name and number in the chat box or in the question box or your Skype username, Rory from Right Line will call you back. No pressure, just to answer your questions. All right, so we'll move along here. And this is just kind of a SPY super system. It's one of the methodologies I use. We do track institutional money flow. This is the key to finding high probability trades. And again, this is just a graphic of the alert service that I provide. They call it Take Trades on the Go. You'll get an SMS alert to your phone with all the information on the stock or option that we're taking. And I'll go over the details of that as we get into the presentation. All right, so the first thing I want to cover, and this is really important, I do this every webinar I do, to make sure that traders understand what drives markets. A lot of retail traders, and this graphic shows these little marbles here. These are the retail traders such as myself and probably most everybody here. And we, as retail traders, we do not have the ability to move the market. It's impossible. When the retail traders are in the trade and the institutions are not in the trade, you get nothing but chaos and chop. Market chops all over the place. There's no defined trend. Now, when the institutions jump in, that's when things change. The institutions are the people, or the computers basically, that can move a market up or down. Any stock, any index, they can move it. And this is people like Goldman Sachs, JP Morgan, HSBC, and then, but it just isn't the banks like that. It's also hedge funds. There's hundreds of hedge funds that have billions of dollars to invest. They can move the market. Vanguard, T. Rowe Price, mutual funds, billions of dollars that they are putting in and out of the market all the time. And then big pension funds. So for state pension funds, state workers pension funds, big hospital chains pension funds, this is what makes up the institutions, and this is what moves the market. So this is what our job is as retail traders, is not to try to beat the institutions. Our job is to find out what the institutions are doing and join them. I mean, that's really the most critical thing that we want to do. And that's what I focus on in my room and with the alert service. This, I just kind of wanted to just throw this up. I use a charting program for technical analysis called TC2000. And then I'll show you I use, I think, a swim for the compass system. But this is, as a week ago, this is the SPY, the SPY daily standard candles. You can see we were breaking out here. This is a week ago Friday. But I just wanted to show it to you in presentation of these are standard candles. And I want you to see these are Heiken-Ashi candles. And this is what we're going to be talking about. In Heiken-Ashi candles, I'll go over all of the benefits to Heiken-Ashi candles and how you can use them in trading to improve your trading. But I just kind of want to give you an example of it before we get into this. So again, that's the SPY from last week. You can see what it did here, moved up from here, and we know what it did this past week. We put basically in new all-time highs almost every single day. And Friday, we closed at the all-time high on the SPY. All right, so I do have in the room and for the alert service, I have specific rules that we try to trade by. First one is we trade the best and skip the rest. And this is an easy way of saying what I'm looking for is the very highest probability trade setups to trade. Those are the only ones I take. I don't take trades that I considered minimally beneficial. I'm not taking something that I might have a small edge. I'm looking for very, very big edges in the trades that we take so that we're going to have a much higher win rate. And the other thing, and I say this in the room almost every single day, and a lot of people, this strikes them as funny. Our objective is not to make trades. Our objective is to make money. That's why we're trading. We're trading to make money. We're not trading to be right. We're not trading to try to be better than somebody else. We're trading to make money. So that's our objective. We make trades to make money, of course, but we only do it by taking the very, very best. All right, so as profitable traders, profitable retail traders, we need an edge over the rest of the retail traders because remember, we're taking money from other retail traders. We're not taking money from institutions. So what we have at edge here, we have 4 different edges. I use the compass system, which I'll briefly talk about, but this is the methodology, a system that lets me know whether institutions are in a trade or not, whether they're short or long, or if they're not involved in the trade. And the second thing we use, once we know the institutions are in the trade, we trade stocks that are relative strength and relative weakness. That doesn't mean RSI. That means a stock that's strong versus the SPY, that's outperforming the SPY, or weak versus the SPY. For example, the SPY is moving sideways or just bouncing around, and the stock is moving up every 5-minute candle. That's got relative strength. That gives you an additional edge to the trade that you're taking. We trade with the market trend if there is one. The market, the market, about 75% of the stocks follow the market. So if you can be trading in the same direction as the market when you take a trade, then that's going to add to your edge. So if the market is trending up during the day, you want to focus on longs. If it's trending down, you want to focus on shorts. And one other thing is to buy, this is actually near support or sell near resistance. So try to get into a trade when it's going long, when it bounces off support and heads up, on going short when it bounces off resistance and heads back down. That way you're not chasing a stock up multiple green candles or down multiple red candles. You can try to avoid what's called FOMO, or fear of missing out. So you're not getting into a trade near the top and having it reverse on you. So that's important. So this is basically the main edges that we use here. this is just kind of a graphic of the compass system that I'll briefly talk about, but this is how a methodology or a system that I use to find high probability trade setups, knowing the institutions are in there. So it allows us to see when the institutions are in there and then sidesteps the ones that are not. It's really important to avoid trades that are not as probable winners for you. It's very important to skip those. And this does this by identifying when institutions are driving the move and when they're not. And again, it's visually, you'll be seeing the charts when I'm showing examples of our trades. You'll see what the chart looks like, but it's all done visually. So even a new trader can actually understand whether institutions are in the trade or not in the trade. All right. So again, we're trying to get an edge over the retail traders. Remember, that's what we're trying to do here. So we only want to trade the very highest probability trade setups. So we're only taking trades that are being driven by institutions. And we're trading stocks that have relative strength or relative weakness versus the SPY or the Qs if you're trading tech stocks. And we want to trade in the direction of the overall market. And so how does it give us an edge? Well, our trades are going to be supported by the institutional buying and selling, obviously. The stocks will be outperforming the SPY, and the stocks are moving in the direction of the overall market. That's a big deal to have that. Okay, so moving forward here, this is basically a funnel, and I did videos on this, but this is a funnel of how to find high probability trade setups. What you do is take the stock you're looking at and run it through this funnel. If it comes out the bottom, then it's a good high probability trade setup. The first thing I look at when I look at a chart is I look to see if the daily chart and the 5-minute chart are aligned. If I look at a 5-minute chart and I think the stock looks good, bullish, but I look at the daily chart and the daily chart is not bullish, it's bearish, then I'm not going to take the trade. I need to have the daily and 5-minute chart to align. And the reason for that is I want to be able to stay in the trade during the day if it goes against me, or overnight, or even for a couple of days if I want to. And the only way I can do that is if I've got a daily chart that is aligning with the direction I want to take the trade. Then trade with a trend, both stock and market. Again, is the stock bullish and is the market bullish today? If they're both bullish, then that's another check mark. That stock is now becomes even a better candidate. Then I look at my compass indicators to make sure the institutions are in the trade. If they're not in the trade, it's out. I can't take it. If they're in the trade, I move to the next one. The next one is, okay, does this stock have relative strength or relative weakness to the market? If it does, I look for is it at support or near resistance? And if not, I'll put an alert on it so I know that everything else is intact. When it gets to a support or resistance levels, I want to get into the trade. Now you can run 5 or 6 stocks through here, and you may get 2 or something that come out that look good. But this is going to eliminate a lot of trades that you might take if you didn't have that funnel set up. All right, so we'll move along. And again, this is what the funnel method is for highest probability trades. I'll skip over that. Basically, it's just what we just went over. There's a few other details in there. One of the key things I always focus on in the room is to have patience. It's really important to wait for trades to come to you, wait for setups. Don't be antsy to make trades. So a lot of times it's best just to sit on your hands. Sometimes not taking a trade is the best trade that you can take. All right, so these are the strategies that I use in my Compass Options room and on the alert service. So if you're an alert, this is going to be made up of one of these type of setups. Typically straight calls and puts. We do a lot of straight calls and puts. I also use debit spreads using weekly options expiration, and I have videos on all of this, but this is one that not a lot of people use, but I've had really good success with it, and I've got not back tested, but I've looked at all the results that I get from my trade log, and I know what this is about an 87% win rate on these. Over earnings, the only way I trade earnings is I trade what's called time spreads. The calendar spreads, and all that is doing is capturing the volatility crush when the earnings are released. The market makers jack up the price on the options prior to earnings because they don't know how far the stock's going to move, and they don't know what direction. So how do they get around that? They protect themselves by increasing the volatility, which raises the price of the option. This method here actually captures that volatility crush when the options when the earnings come out. In fact, we just had one of these on Friday that we got a 50% win on, so that was pretty good. I also use a strategy called the weekly ATM strategy. This basically is selling puts week after week after against a stock that's neutral to bullish and having a longer term put out in time to protect you against that. It gives you basically a spread, but with the long put expires weeks or months later than the short puts that you're selling every week. So it limits your exposure, and it's really a good strategy on neutral to bullish stocks. And we also do credit spreads to capture premium. We just do these over usually 3 or 4 weeks. We have a credit spread on Netflix right now that's working out really well. And the only other thing I do inside the room that I don't alert on is what's called the SPY super system. This is when we have a setup that I see on the SPYs or the Qs where it's bouncing off support or bouncing off a resistance to the downside. The Compass system is telling me that institutions are also driving this trade, and I also know that the market internals are in our favor. A lot more stocks moving up, for example, in bullish than stocks moving down. But these I just call them out. They're typically only 3 or 4 candles, and but it is a method a lot of people that trade the SPY like to use. All right, so let's talk about the alert service first of all. The Compass Options Alert Service. It's basically designed for day traders and short-term swing traders. That's obviously who would get this. This is not an investment strategy. You know, this isn't for long-term investors. This is for folks who want to do day trades and short-term swing trades and not worried about what the stock's going to be doing 6 months or a year from now. You're going to get real-time alerts on the highest probability trade setups. Again, as I said, I only trade the highest probability trade setups, so those are what you'll see. And the highest probability trades, how do we find them? Obviously, institutional involvement, market internals, and then I go through some detailed technical analysis to find the best of the best. And that's just that's my P&L last. That's actually from the fall, so to show what we were producing basically in the room. So, and this is just a blurb I put in here. I probably should have just taken it off. This is something we had that I did from March and June just to show what my win rate was, what our win rate was in the room, and what our profits were based on $2,000 in each trade. So it's pretty good, and this is fairly consistent. This is pretty much what our win rate usually runs between 85 and 92%. All right, and I'm going to show you, and now I'm going to show some results of what we've produced in the room and on the alert service. But the reason I'm doing this, this isn't really to brag or anything, but I want the members and anybody who's thinking be a member, I want them to understand what the realistic returns are on any kind of trades that we take. I'm not going to sit here and tell you that you're going to get 2, 3, 4, 5, 600%. You hear that from enough people when you get these emails with these videos attached telling you how you can turn $500 into $500,000. No, you can't, and unless you hit the lottery. But this is typically what kind of results you're going to see. You know, UPS 23%, here's AI 43%. So typically it's going to run 20, 25, 30, 35%, and we have losers. Be aware, no strategy is perfect. Nothing's 100%. We do have losers. But this was our September trades right here. And you can see the percentages. We did have one at 108%, but most of the time they run 20, 25, 30, 35, 40%. And we had 25 wins and 2 losses in September. That was a 92% win rate. And 2,000 invested in each trade created a profit of about $7,700. It was pretty good. And again, nobody necessarily uses 2,000 each trade, but I have to have some sort of a baseline to follow. And actually, I thought these results were really outstanding because September was a really difficult month to trade. Here's October. You can see the same, every month you see the same kind of percentage gains. And you're going to see a few losses sprinkled in there. 24 wins, 4 losses, 86% win rate, $2,000, 44.80. And the amount of profit that you make on the trades obviously is dependent a lot on the market. If you've got a nice trending market, you can stay in the trades longer. You can take bigger profits. You can't do that on choppy markets. You've got to take profits more quickly. Here's November, very similar here, 84% win rate, a little lower win rate, but a little higher profit. And I have a few different strategies I use in here. That was a put credit spread. And we had, again, a few losses in here, but that's just 4 losses. That's all of them right there. This Roblex was basically break even, 1.2%. In December, didn't do a lot of trades in December. And again, remember, I'm only taking the very highest probability trade setups. So people ask me all the time, how many trades are we going to get a week or a month? I don't have any idea. I'm not going to just send out a trade to send out a trade. It's got to meet the criteria. It's got to be a high probability trade setup before I'll take anything. So we did. We had just 14 wins and 2 losses in December. Still 87% win rate, $3,100 profit, a couple of small losses, but basically the same here. You can see 30%, 36%, 25%. Microsoft 63. That was pretty nice. And January actually was kind of a bang-up month for us. I had 20 wins in a row in January. We didn't have any losses. This is pretty rare, but you know, it's just one of those things. But we had 20 wins in a row and no losses. 2,000 in each trade. Was about a little over 10,000. And you can see the percentages, however, hanging right in there around the same all the time. There was a time spread on earnings here. We made 39% on WDC. But again, 20, 25, 30, 35%. Mara was a nice 65% gain. So that's the, I just wanted to cover that just so you give an idea of what can expect. These are actually specific trades that we sent out on the alert, so you can see exactly what the alert service is producing. But again, this is, some of the trades are overnight. This one was overnight. Some of them are 3 days. Some of them done during the same day. This was STX. So again, this was the one we did 108%. Get in for 370, the option price, out for 770. That's a pretty big profit, and 16% here. So this just kind of shows you that the trades can be overnight or they can be same day. This one we entered at $81, 81 cents or $81 a contract here on BNTX, and out for $1.21 the next morning. That was an overnight trade. So we do have a lot of overnight trades. So if you happen to be a trader that can't trade every day, doesn't have 25,000 in their account, so they're under PDT or pattern day trader rules, you're going to get a lot of trades that are overnight trades that don't impact the number of trades that you're taking as far as day trades are concerned. All right, so I'll just zip along here because I want to get into some of the other things here. Again, this was workday. This was a fairly recent one. We get in for 1170, out for 1470 2 days, 26% profit, but you know, $300 a contract, pretty nice. And Meta here 24%. So you can see again, percentages are the same. They're not going to vary on the alert service because we're taking the same trades that we take in the room. We don't take every single trade on the alert service that we take in the room, by the way, because if a trade I think is going to be too quick, you know, maybe a half an hour, 45 minutes, I don't alert on that because it's really not fair to the people on the alert service. They're not going to have the proper time to respond to it. All right, so this is just kind of a recap that I did of the 2023 trading results using this $2,000 basic investment in each trade. Investing $2,000 in each trade taken in the Compass option room produced a profit of $60,000, $60,208. So if you were using an account of $50,000, when you started the year, each trade was using 4% of your account balance. And of course, the percentage used was lower as the account grew. It produced 120% return on the initial 50,000, growing to over 110,000. So at the end of the year, if you were still doing 2,000 a trade, you were only using 2% of your final account balance. So that just kind of puts in perspective what we did in 2023, and the 2022 was almost exactly the same. All right, so this is a kind of a description of what the alert service is going to look like. Every alerted trade is going to include the stock symbol, the option strike price, obviously, the option expiration date, and the price to pay for the option, which may be a range. It may say $1.05 to $1.10, but this is what you'll get. And this will come out as soon as I see the trade and I send it out. It shouldn't take too long. I have them on my phone so I can see how fast it's coming through, and it's usually about half a minute to a minute or so. I sometimes will put the exit price or the profit target price on the initial alert, but generally I actually send out a second alert with how much to sell it for. So when you get an alert that tells you to put a sell order in there, make sure you mark it as good till canceled, so that it's working when the market opens the next morning. All right, so again, how do we achieve such stunning results? I pretty much told you. We look for institutional trading, and we look for the highest probability trade setups we can find. Obviously, was trading the best and skipping the rest. And just quickly to let you know how the comp system defines institutional trades, because a lot of people ask me, how do you know when institutions are in there? What it does what's called a triple screen assessment. Triple screen assessment is really just a fancy way to say multi-time frame assessment. We're looking across multiple time frames. We look at three things. We look at momentum, trend, and money flow across 3 different time frames. If all of these are lined up in the same direction, the likelihood that the institutions are in there is extremely high, well up into the upper 90s that the institutions are in there at that point. All right, so I'm gonna kind of go into some Heiken-Ashi information here. This is a 5-minute chart on Tesla. This is a Heiken-Ashi chart. I have these candlesticks set up as Heiken-Ashi right here. All right, so this is the compass system, and this, when it's green like this, that's telling me that it's all bullish. The institutions are in here buying. So what I look for is I look for a stock that, you notice how we have a couple little red candlesticks here with wicks and tails, and then we get a flat bottom right here. You see how this is a flat bottom? Heiken-Ashi reversal candles for bullish have flat bottoms. And if you look at the candlesticks on this trade, you notice that every single one of these in this trend has flat bottoms. That's how Heiken-Ashi helps you identify trends. It's very easy to see the trend here. Now you're getting a wick and a tail. If you're in the trade, you think about taking profits right here. All right, so this is the main advantages of Heiken-Ashi candles. And I don't know if you're familiar with them or not, but it's something that you can really use to help improve your trading. Excuse me. It identifies confirmation and trend reversal. This is what I use it for the most. If I'm looking to get into a trade and it's pulling back to support, I want to be able to confirm the reversal. Heiken-Ashi candles lets me do that much more easily than regular candles. It allows trade entries on a confirmed reversal, avoiding failed breakouts. This is really important. If you've ever traded and had a stock break, looks like it broke through resistance and you jumped into it, thought it was going to take off, this is going to keep the reverse on you from occurring. You don't get in until Heiken-Ashi tells you that the reversal has occurred. So that's going to avoid failed breakouts. It smooths out the price movement to eliminate noise, like we just saw. And it allows traders to stay in a trend longer, avoiding shakeouts, and identifies waning trend momentum to exit for profits, and it makes it much easier to visualize the current trend. This is all a big advantage of using Heiken-Ashi candles. And again, I'm just saying here, if you haven't used them, you ought to try using them in your trade. I think you'll find out that it's very, very helpful. Heiken-Ashi candles, by the way, means average bar in Japanese, and it smooths out the price action, so identifying trends and reversals is clearer. It eliminates the noise, which makes it easier for us as traders to stay in a trade and not get shaken out. Again, bullish Heiken-Ashi candles have flat bottoms, and bearish Heiken-Ashi candles have flat tops. So I'm not going to go into all detail here because I want to show some actual charts of some Heiken-Ashi candles. All right, so these are Heiken-Ashi. This is just a graphic of Heiken-Ashi candles so you can kind of understand what they look like. This is obviously a bearish Heiken-Ashi candle. You see the flat top, and then we get a wick and a tail. Now you notice that each Heiken-Ashi candle starts in the middle of the previous candle. They always start in the middle of the previous candle because it's using 2 candles to create a Heiken-Ashi candle. But as we come down here, like we had a wick and a tail, and a wick and a tail formed by a flat top. Okay, so that's a Heiken-Ashi bearish reversal, but it's really not reversing in the trend. This is basically a Heiken-Ashi reversal confirming the trend. So it keeps on coming down with flat tops, flat tops, flat tops. Now we're getting wicks and tails. Wicks and tails, we're getting green candles now. So if we were short this, we'd want to be out now. Now we get a Heiken-Ashi reversal to the bullish side right here. Right? You see how we've had a wick and a tail, and you see how we get a flat bottom. That is a Heiken-Ashi reversal to the bullish side. This is where you would enter the trade, and now you get flat bottom, flat bottom, flat bottom, flat bottom. This is giving you the trend. So that's how we identify Heiken-Ashi candles. And again, there's a Tesla setup showing you a Heiken-Ashi candle, and you can see that trend smoothly. And again, I traded this because the Heiken-Ashi candle occurred, and I knew that the institutions were buying. Look at all the green. I knew that. This was a Gilead. This was a trade we took. This was a Heiken-Ashi candle. This is on the daily chart, so you can use it on daily, or you can use it on 5 minute. You can use it whatever time frame you want. But this was a Heiken-Ashi reversal, wick and a tail, flat bottom. And GE, we also took this. We had this one We took this Heiken-Ashi reversal right here, stayed in the trade, went against us for a couple of days, but the daily chart was still bullish. So we were able to stay in the trade, and then we took profits about a week later in the trade. So, but that's again what we were looking for here. And again, you can see that it was a green here, and institutions were in it. All right, so I'm going to look at some live chats. So what I'm going to do is I'm going to drop this down right here. Drop my charts off here. Okay, so I'm going to move over some. This is live charts. This is live from Friday. And what I want to show you and this is the T2000. I'm going to use this because it's easier for me to see show the Heiken-Ashi reversals on here. So I want to show you some actual charts. This is actually as of Friday. This is Friday's close here. Now on this trade here on Mara, if I look at the regular candles, this is a Mara on regular candles. See the gap up. One thing you'll notice is that Heiken-Ashi candles don't show gaps. They'll never show gaps because they're using 2 candlesticks. So there's no gap here. But if you notice on this Mara trade, this right here was a Heiken-Ashi reversal. All right. So that was Thursday, right? There was a Heiken-Ashi reversal. If you look back here, you look at the one that's right here on this trade. Now, if you're looking this and you're charting this and you're looking to say, okay, this looks pretty good. There's a Heiken-Ashi reversal. I'm going to take this trade at the end of the day on Thursday. You take it on the end of the day on Thursday. This is what happened to you on Friday. You got a really nice move to the upside. It gapped up, so the gap up would have given you some pretty nice profits. And you see how this over here, we had Heiken-Ashi reversal, and you see how smooth that pattern is going up. That's what Heiken-Ashi candles will do for you. Nice smooth move, and then you start to get wicks and tails. You want to be out. Here's a bearish move in it right here, but this was a bullish stock, so you probably don't want to trade it bearishly. But there's a bearish reversal, Heiken-Ashi reversal. Wicks and a tail, flat top. All right, so that's Mara. I got a couple of them I wanted to show you. I got to keep an eye on my time here. So this was Path. Again, Heiken-Ashi reversal right here. Nice move the next day. Right there, another gap up. So I look for these at each day to see if I can find some that will qualify for that. Okay, so if we look at Lilly, I like to show as an example of what a trend can do for you here. Here's a Heiken-Ashi reversal right here. This white line, by the way, is the 8 exponential moving average I use on my charts. But here's the Heiken-Ashi reversal. See the flat bottoms? All the way up, all the way up. Nice, and really, really nice trade in Lilly. Look at Flex. Flex was another one. See, we had a Heiken-Ashi reversal here. Stock moved up, kind of compressed, and here's another Heiken-Ashi reversal right there. And this is on the daily chart. And here's what the daily chart looks like standard, and here's what it looks like Heiken-Ashi wise. All right, and I'll do another long one here, IBM. This is a nice on IBM. Okay, this is Heiken-Ashi. This was I've got some lines drawn on here. This is a bull, what's called a bull flag. You see the big volume, see the big candle here, and we got this is what's called an algo line or a trend line, and it broke above it with a Heiken-Ashi reversal right here. Got a tail, flat bottom. So IBM is a decent setup for Monday morning as a long. Look at some shorts as well. Is RCI. This was Rogers Communications. See how nice, you see this Heiken-Ashi reversal right here. Then we got a wick and a tail and another Heiken-Ashi reversal right there. And that's the Heiken-Ashi candles. Here's the regular candles. It's below the 50-day moving average, which is this red line. So nice setup there on that RCI. So you can use it for longs and shorts, obviously. Here's EXAS. Big bull market, right? The market's really strong. Look at this stock. Does this stock look strong? I mean, it's been drawing. This is the 8 exponential, has been trending down. But here you go, right here on this. This was a Heiken-Ashi reversal candle right there. Wick and a tail, flat top, moved down again on Friday. And here's the actual chart that shows you that. So again, that's Heiken-Ashi candles, and that's an EXAS one right there. All right, so I'll show you one more short. Is GIS, General Mills, Heiken-Ashi reversal, Friday. This becomes a good short for Monday. All right, we switch over to the candle, see what it looks like. Here's what it looks like. You can see this big drop down. You notice Barry was talking about support and resistance levels. You see that support level right there. You see how it broke through it. If it's below there on Monday morning, after doing a Heiken-Ashi reversal, it becomes a really, really good entry. I have this noted down as a potential trade for Monday morning. Now I want to show you, switch over to the 5-minute chart here for Heiken-Ashi. So I'm going to switch over to the 5-minute, and I want to show you some how you can use this intraday as well. And again, this was, we'll do this on, let's see, RCL, Royal Caribbean. And I had noted here at 11:20 in the morning. All right, so right here, here's a RCL coming down pretty weak. See it's chopping around here. You see this Heiken-Ashi reversal right there at 11:15, 11:10. It comes right down. And again, if you're just day trading this short, you could get out right here. But the fact is that this stock is really, really weak on the daily chart. Because if I switch to the daily time frame on this, this is what I'm seeing. So I could easily stay in this trade, even though it might have reversed on me on the 5-minute, but I can stay in that because I'm still looking to hold this thing overnight. But that was a Heiken-Ashi reversal on the 5-minute right here at 11:30, and again here at 1:15. But this was a nice reversal on that. And I'll also show you Pepsi. And Pepsi reversed at 125 right here. Right, so here's Pepsi this was off earnings, it was chopping around, but here's a Heiken-Ashi reversal right there and keeps on coming down, compresses, another Heiken-Ashi reversal right there to the downside on 5 minutes. All right, and I think I got Amazon too, which we took Amazon in the room on Friday, but we took it as a swing trade. But I wanted to show you at 12:20 basically the up move to the upside. You see how it comes down here and compresses on the 8, and right here you get a Heiken-Ashi reversal. Wick and a tail, flat bottom, takes right off. Continues up very, very nicely on Heiken-Ashi candles. So that's what Heiken-Ashi candles look for. That's how they can be used to improve your trading. And let me get back. I need to get back. I'm gonna probably have to go back to the beginning on this thing. So bear with me just a minute. All right, so let's get you dizzy and move you down here. But I think it's better to look at real charts than just phony chart. They're not phony charts, but copies of charts. So what I'm going to show you now is I'm going to show you some of the trades that we've taken in the room and how well they worked out for us. This was when we just took American Express just recently. And I want you to see this Heiken-Ashi reversal on this trade. Now we actually get in here and get out here because I was waiting for the stock to break through this resistance level right here. But even here, you could have taken the trade on a Heiken-Ashi reversal. And we took 25% in 2 days in that on AXP. This was a Heiken-Ashi reversal on AXP. This is the compass system. This again was my TC2000 chart. This is the compass system, which was showing me that on a daily chart that this is where I wanted to get in. And you notice that the compass system is telling me that this is multi-time frame momentum, current time frame momentum, long-term trend. This is money flow. All of these things are lined up green. And it also puts out a dynamic compression zone right here that it breaks out of, which is that shaded area. The compass system does a lot for me as far as giving me compression breakouts, etc. But that was AXP. So I'm going to just show you some of the trades that we've taken recently off of these charts, and then I'm going to wrap it up because I've only got about 5 minutes to go. So this was workday. This was a 5-day trade. This is a daily chart. We were in it for 5 days, took a 30% profit. Notice that it's coming here off of this dynamic compression zone and popping up off of the 8 right there and moving up. MDT, 25% profit on a swing. We took it right here as the compass system went to all bullish, went to yellow, and went from yellow to blue. This means the institutions are now in there. Took the trade, 25% on a swing trade. MDT is VKTX, very strong move here, 30% in 3 days. And then these are all trades that we took in the room and alerted out on. This was a nice one. I think I showed you this one. This was an overnight trade from 8 out in for 8:30, out for 11:30. $3 per contract gain, 37%. And again, here's where we got in right here as it broke out of the dynamic compression zone, and we grab that and we get out right there just overnight. Nice gain. Datadog coming down. This was bearish. You can see everything is yellow or red, so it's bearish. And the breakout was right here, both through this dynamic compression zone. We get in here, we get out for 21% profit overnight. Amazon, a nice 32% profit in 45 minutes. You can see this is a 5-minute chart. You can see this nice move. This little green line here is what I use. It's called the 15 EMA. It's basically a short-term trend. And this is a pop out of the box symbol that the compass system produces. It shows me that the compression is being broken. So that's where we took it, and we were in it for 45 minutes and get out with 32% profit. Taking calls, of course. ENPH, another one, again, just so you can see, this is over and over again. You can see how the compass system is telling me that this is bearish, and then I'm going ahead and finding these pop out of the box symbols and take this, and we're in 20% in an hour. Verizon, this was a really extraordinary trade. Verizon doesn't trade an awful lot. It doesn't move an awful lot. It moves pennies. But we were able to get in the money call for 45 cents right here. And as it broke down, and we were able to get out in 1 hour. And that 45 cents, which was $45 a contract, went to 67. That's a 50% gain in an hour. Just reading this information. That was a really nice one. And this was SPY. Again, we used the SPY for this. We had a 50% profit in an hour. This Verizon, I'm sorry. This was the SPY right here. This is what's called the SPY super system setup for anybody who's interested in that. I call them out in the room when we see them. They're fairly rare because you need to have market movement, you need to have market internals, you need to have the stock, the institutions in there, and you also need to have the SPY coming off a support or resistance level. And this was Netflix, 20% profit here. So I'll move along. And this was Tesla. This is when we actually took this overnight based on this breakdown right here. Pop out of the box signal, everything red or yellow. We gapped down the next day. It fell from 120 to 112. And the puts exploded, of course. The options went up about $7 a contract overnight, and we took the profits. I believe that gap ups and gap downs should be taken immediately. So there's a few more in here, but I'm not going to go through them all because I want to get through to the end of this thing. We want to get the presentation done so we can let the next speaker have the time that they're alerted to or have that they deserve. So again, there's the alert service, and this is the kind of trades we take in the room. And this is what the offer is for anybody who's interested. For the Compass Options Alert Service, 50% off for this New Year's sale, $7.98 for a whole year for the alert service, and just $2.96 for the quarter. That will come with the alerts, of course. You get all of my videos. I do have about 25 videos on the strategies we use and how to find high probability trade setups. And we also have a Discord room that you will have access to, and you get 1 month in my live trading room as well if you sign up for the alert service. And if you want to be a member of the trading room, you also get the alerts automatically if you trade in the room. 50% off. It's $8.49 for a year and $148 for a month if you want to join this for a month. And again, you get the alerts, you get the Discord room, and you get my wise way to trade options. And I think I'm right up against my end of my time. Yeah. So again, if you have any questions or you'd like to get more clarification, put your name and number in the chat box or in the question box, and Rory will give you a call. There's his number right there, 786-732-4656. And I know I had to kind of rush through this a little bit. I had some more charts and things, but I did want to give you some educational background on Heiken-Ashi candles. I think that's really kind of important. So I know I have a lot of questions here, but I don't think I can really take time to answer them. One person, do I take trades at the end of the day when the Heiken-Ashi candle completed? Yeah, that basically was when I would do it. Depends on the rest of the technicals. I may wait till the next morning to make sure it opens green.
David, I want to say thank you. Great information. I know that your take on Heiken-Ashi candles actually got
All right,
me to start
I'm
using
gonna
them.
call it afternoon here. I know some questions, but we can come around to it later. You can always fire something off the right line, and they'll forward those questions to me. So thanks very much, everybody, for listening to my presentation. I hope the Heiken-Ashi candlesticks presentation helped you a little bit to maybe find a way to improve your trading. So thanks very much. Appreciate it.
David, if you'd like to stay in the room and type answers to some of the questions, you're very welcome to. But the system looks incredibly powerful. Great tools. I can definitely see how it provides a clear edge in trading. Thank you for making such a generous, half off offer to our audience today. Ladies and gentlemen, if you're looking for an edge over all other retail traders and finding stock tickers being influenced by institutional money,
Presenter
or if
coming
you
on.
or if you just want to have the hottest options trades sent directly to your phone or mobile phone device by the industry's hottest alert service, Mr. Wise at Right Line Trading has a solution for you. I'll have his link in the chat box momentarily. David, thanks again for being here. Happy New Year. Happy Valentine's Day. Have a great week.